Guys, it's Josh with the Construction CFO, and today we're going to check out how to read your profit and loss report, and we're also going to see why it doesn't really match and why it's not going to mirror your actual cash flow. So how do you calculate your actual cash flow? So please like, subscribe. I'm going to put out little videos like this whenever you guys ask for questions. This is something that I've been working on this week with my clients, and I just realized that other people don't know this. They don't understand it, so I put together an easy way to do it. You can replicate it, but here we go. So this is a July profit and loss statement for a blank company that just to walk through it. So your income, all your income is going to be is your revenue. It's what you actually invoice, right? That's going to since we're doing accrual-based accounting, that's going to be whatever you invoice for July. You don't receive any of this. You're receiving probably what's in May or June, and that's why it doesn't match this, but that's your total income. The next section is going to be your COGS, or your cost of services, cost of goods sold, however you want to do that. And I see I have one area that's coded incorrectly. What that tells me is that something needs to be moved into the right job cost code. Not sure why. And this is a high level. This isn't your actual job cost codes. That's at another project specific level, but your profit and loss is going to show your chart of accounts, what things actually look like in there. But again, I have 12,442 that's coded incorrectly. But this is the way your cost of goods sold should look. You should have job materials, subcontractors, equipment, miscellaneous, and then direct job expenses. I always get asked, what are direct job expenses? It's things like project managers, superintendents that aren't actually doing the labor. Maybe it's composite cleanup, connexes, things that are contractually required for you to do the work, but they're not directly making you money. And it has to be tied to a job specifically. So you can job cost things like accountants and project managers, even estimators, but when you can't tie their hours easily, it doesn't make sense. That's when we put them into overhead. So again, this is how it should look. Total cost of goods sold, it adds it all together, 288, 488. So we brought in 339. We're left with a gross profit this month of 51,176 and 74 cents. And then we get into expenses. Expenses are going to be your overhead. It's anything that's not job costed, anything that's above and beyond to own the business. Maybe that's the vehicle, it's fuel that is for your company truck where your estimator gets reimbursed something and they're not going to a job specifically. Salaries, softwares, you name it, the rest of it kind of falls in here. So what I always like to show people is your gross profit, anybody can make that up. And that's where people will tell you, oh, we're profitable, we make 40, 50%. Well, if I don't put any of my direct job expenses, my project manager, my superintendent, if I don't put my equipment in there or my subcontractors, if I miscode these, my cost of goods sold could really be zero if I wanted to. I could put every single thing into overhead. And I could say I make 100% gross profit, but that's why you can't trust people like that or those numbers. That's why banks want to see your profit and loss and how you actually do things in your balance sheet versus what you could theoretically throw out there and try to trick people. So you can see we have interest paid, we have our employee benefits, all of these lump into our overhead expenses, but you can break them out and again put everything in there. We get down to the bottom, we have our total miscellaneous, or our total overhead expenses, 29,000. So and our total expense is 33. So we take our gross profit minus the 33 and we're left with 17,700. This not net operating income is what we accrual based, what we brought in a month and what we spent this month, what we would show as profit. Now obviously you aren't going to be showing 17,700 positive in your bank for this month. A couple reasons. Your retention, you're not going to be collecting that 10%. And also, you're not going to be collecting these invoices this month, right? We're going to collect them in 45, 60 days. So how do you actually know what you're making today? So I went ahead and I pulled up a report that I go through with my clients. We look at revenue, cost of goods sold, gross profit. We look at all of this month over month. A lot of CFOs do this. This is just a very basic way to show. Plus, then you have the graph, so it's easy to see trends. You can see 13 months. How was I last August versus this August? Because it's, again, seasonal. I don't want to look at February to March or March to April because it's not going to show me, like, sure, that looks like a lot of growth, but was that really growth, or was it just, okay, there was less rain, it was warmer out, I could actually go do civil work or concrete or whatever it is. So it's good to compare year over year to see if you're actually trending up and down. This is an actual client. Haven't been working with them long, but just got their first data in here after 60 days. Wanted to show them where they are. But we look back at their gross profit, or their profit and loss, that 339, like we were talking about. We have their cost of goods sold. All of those numbers get pulled into here. And then what I did is I took their invoices received during the month, and we took that number minus how much they spent, their cost of goods sold and their overhead, and that's where we had this variance. So they would have effectively felt they lost $123,000 this month. And realistically, that's what happens, right? This 198 is a accumulation of this 172 plus maybe stragglers in April, or maybe a little bit of June got paid out. So this 380, I know why it's so high. It's because there's retention that got finally paid out over years of projects. But these are just little things that you start to look at and notice trends in. And we try to map all of it out so it's easy to digest really quick. But yeah, if you guys want a simple way to track how much should I actually bring in cash flow, this is how I do it. Now keep in mind, this is different. This is historical. This is what bookkeepers do, controllers. This is like looking backward. Obviously, as a CFO, I pull it up and I reference it because it helps predict the future. But this is not cash flow forecasting. I'll make another video on cash flow forecasting if that's what you guys want. But just wanted to run through, how do you read a profit and loss statement? How can you turn that into usable data and actually see your cash flow by month? And so, again, like, subscribe. Let me know in the comments, is there any other videos you guys want to see, anything you want to learn about, whether it's balance sheets, job costing, what it actually looks like to put together job costs for a specific trade. I'm happy to do that kind of a video too. So, thank you.